Vanakkam. We are going to see in this slide is there the last type of mutual fund in the heading of other schemes. This other under the other schemes, we have there the two type of fund. First one is the index fund or exchange traded fund. Very oftenly, we are all receiving or get know about index fund, index fund, index fund. What is mean by index fund? Actually, it is directly relevant with here the financial market, especially equity market. How it is the index is calculated or how it is index is assembled means an index is a method of track the performance of some group of assets in a standardized way, which mean to be nature. If suppose in any stock exchanges, there will be a good performing shares are there. In good performing shares, there is a combination of, I think if you go for the BSE, it is 13 number and in NSE 15 numbers. So the assets of there, the particular BSE 13 numbers altogether value and you will keep it as the one unit on base of that particular one unit market is made by buying and selling of that one is it called there the index fund. So the index fund is a portfolio of stocks or bonds designed to mimic the composition and the performance of financial market index. Here mimic means repeating or reflecting. And next one is index fund follow the passive investment strategy, and investment funds seek to match the risk and return of the market on the theory that in the long term the market will outperform any single investment. The idea is to be very simple in index fund and exchange traded fund is to be to match their the requisite or their the expectation of the investor expected him or her from the type of their the equity market, which is called their the index fund, which mean to be nature the pooled money is going to be invested in index fund, not in their the any other fund. And we move on to their next one, fund of fund. This is a good example of their the making investment of their the money in another fund, which is called their the fund of fund. This is also the open-ended fund. This fund will always have their the one underlying asset or underlying fund. For example, if suppose the fund of fund money is going to collected for the purpose of investment, at the time the fund of fund objective says this fund of fund which is meant for index fund, or this fund for children's fund, or this is for the retirement fund, which mean to be nature this investment strategy of this particular fund is going to be the major portion of the pooled money is going to invest in that particular fund. For example, I am telling that it's children's fund mean 95% of the fund of fund investment is keep it in the children's fund and 5% in the another debt fund. So that is the fund of fund. So what is the benefit? We will have there that get the return of the best performing fund as well as plus there that debt instrument for the minimum requirement. So in this slide under the other schemes we have see about the index fund or exchange traded fund, and next one is there the fund of fund. It may be in the domestic or in the overseas. Nandri.